Was reiterated sell at Ray J. I just thought I'd mention that just because we're talking cryptos. But look, I mean, even the best in the bright.
Is crypto crash over or just the beginning? The crypto market has had a dreadful month, with Bitcoin losing over half of its value in May alone. Overall, this emphasizes for many the problems that have traditionally characterized the asset class, namely volatility and a plethora of uncontrollable variables. Of course, dramatic swings in the crypto market are nothing new, especially for those who survived the 2017 rally and subsequent meltdown. But the question remains, is the crypto crash over or just getting started? Stay tuned till the end of the video if you want to know more about this debate. But before we hop into the video, don't forget to subscribe to our channel and share this video with your friends.
Most dominant digital property network. Think of it as like granite blocks in Manhattan and cyber Manhattan.
In the near term, a more important concern is whether last month's drop was a blip on the radar or a portent of a deeper malaise. Investors could look no further than Bitcoin, the most important cryptocurrency, which recently has stabilized in $35,000. However, BTC's next moves will be critical. Those who jumped on the last Bitcoin price increase have learned the hard way how volatile cryptocurrency investments can be. Bitcoin soared to an all-time high of nearly $65,000 in April, only to plummet to around $32,000 on May 23, losing more than half of its value. So far, Bitcoin has performed admirably. For the past decade, cryptocurrency has been very volatile, with rapid gains and losses all part of the game. All of this, however, will come as a shock to more recent investors who have not experienced a market meltdown in the previous 12 months. Since mid-May, when the price of BTC fell below $40,000, the asset's price has fluctuated between $32,000 and $38,000. BTC has never been able to get enough support to reclaim the $40,000 it lost. Analysts are pointing to a critical level of support at $35,000, which, if it folds, may lead to a major and sustained advance toward $40,000 and beyond. This move, though, would not be as leveraged. However, recent market activity has been extremely turbulent. BTC, on the other hand, could be entering a new period of price discovery on the lower end.
Cryptocurrency has been a big topic of discussion for a long time, but it's really gone on a parallel path to Wall Street.
Is the crash overblown or signs of a chief concern? What was the reason behind the price decline in May? The dip in May was triggered by a dip in demand and an overhyped push from the outside market, similar to multiple reductions experienced in 2017 and 2018. To put it another way, there are more advanced solutions and better-serving cryptocurrencies available now than there were in the past, with Ethereum being a prime example. Finally, no one knows that BTC's next move will be, given the present price action and the fact that risk sentiment is still a concern. In crypto, as in any new emergent technology or asset class, volatility is unavoidable. It's also crucial to keep an eye on the network's adoption rate. For example, if the network's participants continue to grow over time and the network's worth increases, this could be a significant issue for many other cryptos in the short and long run. BTC and cryptos have the fastest growing acceptance rate of any technology in recent years. The rate of adoption of BTC has been far higher than that of the internet. BTC and other cryptos are also a natural hedge against a never-before-seen rise of the US dollar money supply from a monetary standpoint. BTC has largely replaced gold as an inflation hedge, with institutions purchasing BTC at never-before-seen rates. This could be a tailwind signaling a long-term bullishness on BTC, but it's too soon to tell. Obviously, the US Federal Reserve must maintain its current course or status quo in order for this tendency to continue. Buckle up for more volatility. Most investors have just come to terms with cryptocurrency's price volatility. There can't be any phases of rapid rise of 100 to 200% in a short time if there are any times of abrupt decreases of 20 to 50% over several days. Crypto assets are appealing to individual investors because of their frequent sharp changes, which encourage them to take huge risks in the chase of huge rewards. Crypto, on the other hand, will become equivalent to other assets, like as metals or other traditional assets trading on the world's top exchanges once the risk is removed. It is debatable if BTC will always be able to experience such severe volatility. Large dips, for example, will be impossible when BTC's capitalization is so high that retail purchases have little effect on the exchange rate. It's anyone's guess where crypto values will go in the future. However, given its track record, we might easily see BTC or other cryptos approach escape velocity in the near future if risk appetite remains strong. There hasn't been much good action in the market in the last 60 to 90 days, which could indicate to rising prices. Role of Ethereum. The spotlight has recently shifted to Ethereum and the decentralized finance or DeFi ecosystem that sits on top of it has gotten a lot of attention. Nonetheless, the price of BTC has a significant impact on both ETH and DeFi assets. There's currently an unavoidable linkage between BTC pricing and the wider altcoin and DeFi market, though this may weaken with time. Why the market can ill afford to ignore Elon Musk's tweets. It was the first Welcome to Crypto Day, according to Stephen Willett, CEO and co-founder of FRNT Financial, who advised newcomers to get acclimated to it. These assets have a history of explosive rises and sickening sell-offs, says the author. Crypto enthusiasts will encourage you to buckle up and enjoy the ride, as the price has risen past $40,000 at the time of writing. However, the latest wipeout was not an accident. There were specific, traceable reasons for it. Bitcoin and other cryptocurrencies are currently facing two existential risks, which investors would be aware of. First and foremost, blame Elon Musk. Tesla creator Elon Musk, a crypto enthusiast and serial tweeter, sparked the drop by revoking his February decision to accept Bitcoin as a payment for his company's electric cars, calling its energy use crazy. Tesla and Bitcoin have always seemed like an odd match, given that the electric company is at the forefront of the clean energy revolution, while Bitcoin miners run a coal and consume more energy than Finland. The second catalyst was that Consumers Bank of China's regulatory crackdown, which barred banks and online payment platforms from delivering crypto services to users, but people can still own them. China's financial regulator seeks to reduce speculative trading, preserve capital controls, and encourage the country's citizens to adapt a digital yuan. These problems are in condition to previously recognized risks, such as severe price volatility, a lack of regulatory protection, hacker threats, and the fact that no one knows what cryptos are for. So how scared should investors be? Tesla has stated that it will take Bitcoin once it was cleaned up its act. But this will be difficult. Bitcoin's sustainability is still a long way off. Despite the fact that competing cryptos like Ethereum, Cardano, Ripple, and Stellar consume less energy, other corporations may be scared off by Tesla's reversal since they are already under pressure from shareholders to meet environmental, social, and governance (ESG) requirements, and supporting crypto transactions will work against that. Other corporations will be wary about allowing crypto payments in the wake of Tesla's action, fearing an ESG backlash. According to Laith Khalaf, a financial expert at investment platform AJ Bell, the tide has changed. Tesla's action will make other companies wary about supporting crypto payments for fear of an ESG backlash. The few businesses that have already accepted Bitcoin may be reconsidering. Mr. Khalaf advises consumers and investors to stay away, particularly younger Bitcoin fans who are also likely to be sensitive to climate issues. Celebrity endorsements may also dry up. According to Susanna Streeter, Senior Investment and Markets Manager at Hargreaves Lansdowne, Beijing's tough attitude appears to be the start of a deliberate campaign to curtail cryptocurrencies' decentralized potential. The US Federal Reserve has expressed a desire for stricter regulation, while the UK's Financial Conduct Authority was warned investors that they may lose all of their money, she continues. For now, investors will have to stay the course and enjoy the ride. What are your thoughts on it? Let us know in the comment box below. If you like this video, give it a thumbs up and subscribe to our channel for more interesting videos.